real live stream where I share my real P&L on 3 accounts and teach my proprietary safe wheel trading strategy. Please type in the chat that you can hear me okay, and be sure to post any questions you might have. I want to get to all those before I end the broadcast today. Okay, so let's get started. First things first, I'm going to talk about the earnings edge. This is what I trade here, live account. Walter says, sounds good. Thank you, Walter. All right, so earnings edge, what happened last week? You can see my account P&L, which you really can't see anywhere else from any other instructor that I know of, not consistently since 2019 anyways. $9,264 in this account. My last trade was ADBE, lost $410, so that was a loser. My record since inception, 34, 20, and 8. But since I made my last update in October of 2022, my record is 14, 13, and 5. My average win is 945, average loss 477. So if you have a 50% win rate, but your average wins are much higher than your average losses, you make money. And that's what the system's done so far. So in 2022, I did 63%, where the market was down to about 20. And let's see what are we trading for SPY today? SPY is trading for 446.84. Let's see if I can pull that spreadsheet back up. 446.84. Okay, so we can see that the actual earnings edge, let's make sure this is correct here, or what is it, 92.64. So the earnings edge is up about 13%. The market's up about 16 and 17% year to date. So the market's doing quite well this year. With this system, the earnings edge, you are going to get more volatility than the market, right? So the market's outperforming this year, because even if these numbers were the same, in other words, they were still making the same amount of money, because of the higher volatility of the earnings edge, it would be underperforming on a risk-adjusted basis. But overall, since the inception, the earnings edge is up 85%, and the market is down 6%. So that's pretty good performance there. If you're interested in that earnings edge, I do have a link in the description if you want to be a part of the alerts, but the course is currently closed. I'll probably open it back up at some time. I haven't decided when yet. Okay, what's the next account? Let's go here. Let's talk about the Premier Level 5. You can see my account right there, 36,429. So you can see the Premier Level 5 is doing as expected, 36,429. And you can see since inception, which was April 8th of 2022, my record is 21 wins, 7 losses, 7 break-evens. I have 2 open trades right now. You can also see how it performed since April 8th of 2022. In 2022, outperformed the market 12% versus 6. This thing has about 1/4 the drawdowns of the S&P. So it's, even if it has the same percent return as the S&P, you're going to get it's better risk-adjusted performance. But it actually so far is outperforming the S&P on top of having a better risk profile. You can see this year it's up 8%. Again, the S&P is up about 17, but overall we're up 21.43, where the S&P is up 10%, and that's since the inception of April 8th, 2022. And of course, I've shared my P&L with this account every month, and actually every week on this live stream. So I haven't added any money or taken any money out of these accounts. Right? They're all just traded accounts. The results are the results. Okay. So now let's get into the safe wheel. Let's see here, which one is it? here's the safe wheel. Okay. So with the safe wheel, it's another plan that has total black and white rules. There's actually a link in the description if you're interested in the fast track for this, or you can watch the live streams and you can learn it for free. But I haven't gone over every single scenario in real life yet, so that's why it's good to get that fast track, and it has a flow chart of every particular scenario that could occur. And this has black and white rules that you can follow. All right. So I've been trading DraftKings for a while. I can see here one of the first questions I ask myself is, do I own any shares? Do I own 0 shares, 100 shares, or 200 shares? Those are the only 3 possibilities. And it looks like I own 100 shares. And I always want to know what my cost basis is, which is $30.50. That's what I was assigned. My assigned price was $30.50 on these 100 shares. I know it says $28. I actually, if you're part of my course, I actually put together a video on how to better track this, so it should show $30.50 on here instead of $28. So next time it'll be tracked properly. I also see a position here where I own a long call. I put that on last Friday. I always have a long call on, even over the weekends. Don't need to do anything with my long calls today. And I have a put hedge. Now, the question, I always like to deal with the put hedge first. So the question on the put hedge is, there's 2 questions. One, is it 100 days or under, or is it under 100 days? And the answer is yes to that. It's 95 days left. So it's got the depreciation's happening quickly, too quickly for my liking, too quickly for the system to overcome it. So that is going to trigger me to do something. Also, I like to make sure that the $25 put is within 70% of the actual price of the underlying. Current price of the underlying is $31.80. But I know I'm going to move this put hedge. Now, anytime I move a put hedge, typically I can get into a new position or use a new stock, but not if I own shares. So I own shares here, so I don't really have the option to get into a new underlying right now. I wouldn't do it probably anyways, but I don't really have that option available to me because I own shares. But the first thing I'm going to do is move this put hedge, because it's under 100 days. So I'm going to look for a new put hedge. So I'm going to go into the trade tab here, and I'm looking at closest to 150 days, but between 130 and 200 days, but closest to 150 days. So I have 158 days. So I'm going to go with 158 days. So I picked my expiration cycle based on being closest to 150 days, between 130 to 200. So I know I'm going to pick this one. Now the next thing I want to do is get within 80% of the actual price. So 31.80, I'm using my calculator here, 31.8 times 80% is 25.44. So the 25 doesn't quite qualify because it's a little bit too low. If this thing had a 2750, I definitely would go with a 2750. But according to the rules, being very strict, I need to go with a $30 put. So I'm going to be really close. So I'm going to buy this one, and I'm going to buy 3 of them. And the way this system is sized is if I have between $5,000 and $10,000, I'm going to use 3 put hedges, and I'm going to be doing the traditional wheel with 1 contract, 3 to 1. And so that's currently where I'm at. So I'm going to buy 3 of these. Now I can roll into this. Okay, so rolling is just merely closing one position and opening another simultaneously. So I'm probably going to just do that to make it easier, because I just don't want to like close one out and then buy the other. I'll just do them both at the same time. So I'm going to go to the February 16th, $30. So I'm going to go here. February 16th, $30. So I'm going to exchange this one right here. I'm going to go ahead, create rolling order. And here it is down here. So I'm going to go to the February 16th, $30. See if I can find it. February 16th, $30. Okay. So I'm going to get right out of this one, the current one that I'm in, and I'm going to exchange it for this. It's going to be a debit. Looks like it's going to be like $240 approximately. I want to pay as little as possible. So I'm going to come down to $2.30. And that's a roll. So if you're not familiar with the term roll, this is what I'm doing. Let's see if I can get a new put hedge on here. And if you wanted to go to the 25 instead of the 30, I would totally understand. Like you can, I was considering that, but it really wasn't following the strict black and white rules. But you might be better off just going to the $25 put here on the February 16th. Let's see if I can get a fill here. Okay. Filled at $2.41. Now I have my put hedge on. So I'm going to go ahead and work the traditional wheel because I got both my hedges on. I got my hedge, put hedge, and then I've got my long call, which is kind of like the hedge for this hedge. Right? I'm double hedged, right? So I'm going to go ahead now and run the traditional wheel. Remember, my price is $30.50. That's what my cost is on my current 100 shares, $30.50. And I want to go into the nearest expiration cycle because I think I can get the most depreciation here. And $30.50. I want to sell a covered call against my $30.50. All right, that's my basis. But what I like to do is go to somewhere where, see, this is 31 and 30. That's about 1%. But because I'm still out of the money, I'm going to come back 1. And that's just the way I like to do it. Because I like to be out of the money, so if I get called away, I make money. But also I want to get a little more premium than just that 1%. So I'm going to sell the 32 strike call. Looks like the mid's 48. I'm trying to get 49 for it. Okay, so picked up $48 there on my traditional wheel at the $32 strike. Be nice to get called away, make an extra $150. And then of course I've got my put hedge. I'm hedged really well, really close right now. Okay, so there is the safe wheel trade for today. And let's get into any questions. Looks like I have a few questions here. WID3, how much do you make from your live streams or Google AdSense? Probably around, when I initially started my channel, I was doing a lot of reviews, more reviews than live streams. I was making around $1,000 to $1,200 a month, but now I make like $250 or $300. I've considered not monetizing some of my videos. In fact, my last couple videos I didn't monetize. My last live stream because it's just not a lot of money. So I might be better off getting more reach without having the ads. All right, you guys, Steve-O says you can hear me. Charles, thanks. Anthony. Okay, Will. I still buy my $5 call on Monday. Was able to sell it last week. Wondering if the stock went high enough. Were you also able to sell your call? In other words, was my call in the money? Did I make any money off of my call last week? No, I did not. I don't remember which strike it was, but it was higher than the actual price of the underlying. It sounds like your $5 call went into the money. I guess it's because you bought it at a different time than me. So that's good. All right, Will, unrelated to your channel, can you tell us any updates on how you're doing in jiu-jitsu? What's your favorite technique? I like the trap and roll most and the rear naked choke. I am doing pretty good in jiu-jitsu. I'm a purple belt. Got my purple belt about 6 months ago, and I tend to do best with the electric chair coming out of the half guard. That tends to be my favorite move. It tends to work well. Just tapped a brown belt the other day with it. Not to say that I'm very good, because I still get beat up by blue belts sometimes. All right, next, Salvatore. So the underlying was trading above your assigned strike. Yes, $30.50, and the underlying is selling at $31.85. So you could start a new position. Just sell the shares for profit. That is correct. I could do that. You are right. But that's not part of the rule set that I put together when I did the back tests. And I think it complicates the rules a little more, and I'm trying to make them as simple as possible. So for that reason, I did not just sell my shares and start over. But I am able to collect another $50 and hopefully get called away. And if I don't, that's okay too. Well, that new put hedge is really protecting this week according to the risk graph. Oh yeah, it's really close. I wish the 2750 was available. I definitely would have went with the 2750. I even considered going with a 25, and if I probably had to be right on the strict rules, because I need to keep the strict rules because I'm teaching this, I probably would have went with a 25. Ben, for the earnings edge strategy, does it matter what time of day or week you trade? For example, do you trade the same day and time every week, or is it always different? Or does it not really matter? Curious, I'm in the earnings edge. I like to trade, typically, I can trade at any time. I like the earlier the better for me, because it gives more time for the stock to move. So I'd rather put on a trade on a Monday instead of on a Tuesday, for example, because it gives the stock more time to have some type of movement. But as far as the time of day, I like it when the market's really kind of settled down, which is around 10 a.m. my time Pacific. So what is that, 1 o'clock? So about 3 hours before the market closes. I think it's around lunchtime. There's not a lot of activity. It seems like the earnings edge tends to be better at that time, but I really have no statistical information to back that up. It seems to be better, but I'll place the trade early in the morning too. I don't have a rule about the time of day, but I tend to trade it around 10 a.m. or 3 hours before the market closes. But I've also traded it earlier than that, 7 a.m. too. So it's what I tend to do. I kind of like being in there around 10 o'clock, but that's not necessarily a proven thing that it's good. Video cut out. Okay. Hopefully you guys can see the video or hear everything. Charles said, I missed the earnings edge results from last week. What did I trade? I traded Adobe. Let me go into that. Maybe I didn't get into that. Let me get this out of here. I traded Adobe. ADBE, you can see here. And I lost $410. So I think I must have made like $600 or something like that on Adobe earlier this year. So now I'm only up like $220. Walter's back. He made it back. Okay, good. Walter, you rolled the put hedge before checking if there was enough juice in the call premium. Oh, yeah, you're right. I should have checked that. I mean, I already knew it was there, but I definitely should have done that. There was enough premium this time, but what if there wasn't? Yeah, so I knew there was. So I, my error. I should have shown that first, that I know that there's enough juice. Um, so I kind of, took a mental note. I already knew there was, but I should have talked about that first. Thanks, Walter, for clarifying that. Will, we still could have put in the second squad of troops if not enough premium. Yeah, definitely could have done that. But I should have talked about that first, because I think it's. I always like to address the put hedge first, but I guess either way it could work. But it would make more sense to kind of talk about, make sure there's enough premium in there. But correct, I could have. I eventually, I could have put on a second tier. Now, if I was 200 shares long, definitely needed to address whether I could get premium or not before moving that put hedge, for sure. So it's probably a better habit to do it that way. Salvatore, the flow chart talks about the put hedge being paid off. Just wondering what that looks like. What kind of market move would make that the case? So when I say paid off, what I mean is it's actually paying you. You've actually made more money on the put hedge than the loss on the long shares. So your put hedge has overcome the long share loss. That's what I mean by paying off. Some guy, let's see here. I traded Adobe as well, albeit entered a week earlier. It did go into profit, but you ended up closing for a $150 loss. Yeah, it's with the earnings edge, there's a lot of times where it's in profit, but I want a lot more profit. I want to hit the big profit, maybe at least 10% return on my capital before I pull out early, because I feel like you want to make sure that your wins farly outweigh your losses. So there's been plenty of times where I could have taken a profit, but I ended up taking a loss. Zoli, the $25.95 DTE put hedge was 15 deltas, and the 30 158 has 37 delta. Isn't enough to sell 395 DTE put hedges and buy only 258s. So because I have a rule of the put hedge eventually overcoming the costs of the long 200 shares, I need to have 3. If I only had 2, my put hedge would never pay off. And so that's the reason for that. And some guy, you're talking about the earnings edge, same, got it to about 7%. Yeah, so you're not quite there. So it went up, you were at 7%, but you didn't take it. If it was at 10%, I would have taken it. So, yep, that's a good example of what happens if you want to learn the earnings edge and you start getting good at it and understanding it, and you want to employ different rules where you want to take profit at 6%, you can do that. And I was doing that at first. That was the change that I made. We're from 6% to 10% on taking profits. Okay, I don't see any more questions. Now, next week, I have a family situation where someone in the family is having surgery on Monday. So I think I'm going to make it on Monday at 7:15, but it's possible that I might not do the live stream later in the day or on Tuesday. It just depends on how that situation goes. So if you don't see my live stream at the exact time next week at 7:15 a.m. Pacific, there's a reason for it, and don't worry about it. So if you don't see me right here on time, it's no big deal. I'll be back. I just want to make you guys aware of that. Oh, also, Walter says, be sure to like this video and subscribe to the channel. Thanks, Walter. I appreciate that. All right. One thing I like to say when I take off. Well, I do have one more. Let's see what Salvatore says. Wouldn't it be pretty massive drop for the put hedge to pay off? Yes, it would. Yep. It has to be a pretty good drop. Like a crash? A crash would be nice. Okay, I'm going to go ahead and end the broadcast here. And I always like to say, if the P&L is not real, what else are they trying to conceal? All right, I'll be back next week. See you guys.